You might look at a financial statement one day and see something a little bit unusual. It might say something like appropriated retained earnings. And you might be wondering, well, what does that mean? Or maybe it says restricted retained earnings. Somehow it's not just the normal retained earnings. It's got it broken out into two parts or something like that. And so I'd like to just explain what kind of the restrictions are or that can be placed on retained earnings so you have an idea if you see something like that. So when we think about reasons that there might be restrictions placed on retained earnings, we've got things like lending agreements. So lending agreements. And then there also might be something to do with like the board of directors has a certain policy. So BOD policy. When we think, okay, well, why would there be a lending agreement that has something to say about what retained earnings should be? Well, the lender might say, okay, well, look, if we're going to lend you this money, we want to ensure that your retained earnings meets a certain threshold. Right? We don't want you to just pay it all out in terms of dividends, right? Because dividends would decrease retained earnings, and we want to make sure that you're up here at this threshold. And so we're going to say that your retained earnings has to meet this minimum amount of $1,000, $1 million, or whatever it turns out to be. So in any event, there can be these restrictions that will actually cause a firm to have some account that says something like retained earnings and then appropriated retained earnings or restricted retained earnings. Just to give you an example, and this really isn't that difficult of a concept. You'll just have the retained earnings on the balance sheet under the stockholders' equity section, and then you'll have something like, okay, restricted or appropriated, and let's say that's $20. And then the unrestricted, those are just the ones that aren't affected by that lending agreement or the board of directors. Let's say that's $80. And then to get the actual total retained earnings for the firm, you just add those two amounts together. So it's kind of like this is X, this is Y, and then you just have X plus Y. And so in this case, it would be $100. Now, some firms might have restrictions on their retained earnings, but they might not actually kind of parse it out like this. Instead, they might just put it in the notes to the financial statements. So just bear in mind, just because it's not actually broken out like this, doesn't mean that the firm doesn't have some kind of restriction on its retained earnings.